Okay, hello and welcome everyone to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, June 10th. And I'm Michael Boutros. Good to be with you guys. Some questions here. First of all, good morning to everyone in the room as well. Great to see you. Eileen would love to know where mortgage rates are heading these days. Not something I follow too closely, but we'll be following broader interest rates in general. Eileen will probably get a nice indication. Mark, good morning to you as well. Says, looking for US dollar strength. What do you think? So to start off this session, good morning, Adrius. Great to see you as well. To start off the session, guys, the dollar is trading broadly weaker against all of its major counterparts. The biggest loser on the day, or the biggest winner rather, versus the dollar on the day is the yen, up 1.19%. CAD is up 0.9%, give or take. Kiwi with a gain of 0.88. The European counterparts, aside from the sterling, which is actually really high today, up 0.7%, the euro and the Swiss have been pretty laggard here with just slight gains. Obviously, we've been tracking the euro dollar scalp, guys. We'll take a look at that. That's sort of teetering out here. You know, we're holding that major key resistance. We ran into it again last night, somewhere in the range of 1370, and then came right off. So the risk is still, as noted in yesterday's scalp, the risk is still for a little bit of a pullback there. That being said, the Aussie dollar continues to outperform very nicely. We were watching, or overnight, you got some comments from RBA Governor Glenn Stevens, which sparked some volatility. We'll take a look at that as well. First things first, let's just grab the dollar index and see where we are broadly speaking. So for the index, the major key support that we were looking at since the start of the month, 11,880, 11,887, finally gave way with this break below a basic trend line off the low. And major key support near term, 100% extension off the high, and a 50% retracement off the low, 11,840, 11,839 here. The low so far for the session, 11,831. Okay, so momentum with some nice moves here as well. We were looking at this yesterday, breaking below the 50 level as we were breaking the opening range low for the month. Near term, you might get hung up here, a downside break, and you're essentially looking for a run on this region here. And that would complete a 618 retracement from the highs and the median line that we're currently working with. And that comes in somewhere in the range of 11,790. All right, look for resistance at today's candle high. So as far as the index is concerned, we could see a bounce here. Yes, Mark, I wouldn't be too surprised. We'll still take every trade on its own merits as usual, but broadly speaking, yeah, we're looking for near-term dollar support, a break below this. Let me take a step back there, Mark. Even if you get a rebound here, right, the broader bias remains weighted to the downside near term. We made a change in behavior, and we talked about this earlier in the month with the momentum profile here. It's the first break sub 40 that we've seen in the index since early 2014. And on the rebound, it's the first time from oversold conditions or sub 40, you're finding resistance exactly at 60. So on a scalp basis, sure, we could look for some strength against this heading to the US Open if we do see a rebound. But broadly speaking, I still think you're looking lower here. Mark says, yeah, sure, just a rebound, no change in bearish stance. Right on. Perfect way to state it, Mark. I'm with you on that. All right. So now that we have a picture of what the dollar is doing, and certainly, you know, it looked a little precarious here yesterday as we put a doji just above this. Keep your eyes on the close, guys. This is something that you want to take a look at for gold yesterday, too. We were looking to see if gold was going to make that break. It closed, or was it not gold? I'm sorry. It was the Kiwi trade. We'll take a look at that in a moment. But in general, we want to make sure that we're looking at the close. And yesterday's close actually closed right at that basic trendline support. So, you know, the break here, looking for key support at 11,840. All right. So let's jump right into the scalps. First things first, euro dollar. I actually haven't taken any positions on this. Oh, guys, I'm not sure where the scale charts went for the euro. I'm sorry about that. That's weird. Huh. Okay. In any event, here is the scalp from yesterday. Again, we were looking for that near-term resistance, major key resistance. Here's what the daily chart looks like for the euro dollar. So 113.90 is the 88.6. More importantly, just ahead of that is that median line off the low. Has offered some really nice pivots in price. Okay, and that's really the barrier of which we need to get that extension to 114.73, 115.32. From a scalp standpoint, if you guys remember the night before, okay, we were looking for a rally into 113.76. It fizzled out right ahead of it. Okay, so here's the final extension. We made it through that barrier into 113.76, and the downside break taking us back below, again, 113.13, 113.24, which has been the level that we've been trading against here, essentially, guys, since Tuesday. And that's still the resistance region that you want to be mindful of. Keep in mind, again, that median line right there. So you've had multiple attempts at a breakthrough. Even in your term trend line that we were looking at yesterday, blasted right through when we're back below. So all those barriers that we look for when the price surges through and comes right back below, that's a tell, okay, that the broader upside momentum is continuing to fade. And if we look at the momentum signature, higher high, lower high, right? So there still is a risk for a near-term pullback, and that's why, Mark, I do think if the dollar gives us a little bit of a pop here, you could probably play it into this region. Whoops, I did not mean to do that. You could probably play it into this region, okay? And that's been, since the start of the week, our bullish invalidation level, right? So this is what put us constructive earlier in the week here on the Monday break. Into yesterday, this was the bullish invalidation level, major key support. We turned ahead of it. And again, if we break below this, you'd look to see a little bit more of a concerted decline, a little bit more of a concerted pullback here for the euro. What else can I say about this? Oh, I wanted to do a quick note yesterday. I wanted to do a quick note about the opening ranges for the euro dollar. So let me bring up a really near-term chart just for your consideration here. It's a nice practice drill that we should be doing, guys, in the room here. I do have it here. Okay. So here is the euro dollar, okay? And I just wanted to point out yesterday's New York opening range. Again, the opening ranges have been breaking later in the session here for the United States. If we look at this for the euro dollar, here's the open of New York yesterday, okay? Sometimes it takes a little patience, guys. So here's the 8:30 or 8 o'clock slot. Your low comes in right at 112.13. The high comes in right at 112.64. This break didn't happen till 11, okay? And it does shift the upside focus to the upside, or the near-term focus to the upside. The questions I've been getting, and who sent me that email yesterday? I think it was Ben. Hey, Ben, if you're in the room, quick note here on the opening ranges. So, guys, if you don't get the break of the actual opening range, Bill, there he is. Hey, Bill, great to see you in the room, sir. If you don't, this is not going to be the play, okay? This, when we're talking about the daily opening ranges or even the weekly opening ranges, we're using that to ascertain bias. That's not necessarily your trigger to get in. Okay, so this right here, 1125, the opening range for the United States session finally gave out. Great, we're looking higher. Doesn't mean I'm just going to jump into a long. Where's my stop? 65. My stop would have to be below the lows for a U.S. session, right? And that's 112.13. Well, that's more than the ATR I'm looking to take, just slightly. So I can't take that, right? But the pullback here into the opening range high again, now you're looking for long triggers in momentum. Okay, there wasn't a long trigger that gave out on that pullback because momentum held 60s resistance. That would have kept me on the sidelines. Heading into the Asia session is where you really start to see the volatility start to surge. And again, yesterday there was some data and there was some event risk that prompted the move, but I just wanted to go over, it's the pullback after the break of the opening range that you want to try to get in on. It's always going to be better to buy into support and sell into resistance than try to buy the breakout or sell the breakdown. And these are just common practices. So, Bill, does that kind of give you a little bit of clarity as far as at least using the near-term price action to give us bias? We always want to be mindful of where we are in price also. So in your email, you're asking on the euro dollar, it said, if it broke above 113.23, 113.24, we should be looking for the extension to 113.76, right? And that's exactly what I would be looking for, except on this break here, again, we have to be mindful. Where are we going to be putting our stops? And price action is already in overbought territory. You're already at the highs of the week, and the daily chart already highlights this major resistance. So I wouldn't necessarily be comfortable jumping into a long into resistance just because we broke that level. But from a bias standpoint, if we had broken above this and held, I'd be looking to buy pullbacks. Do you see the difference there, Bill? Does that make sense? He says, yes, very good. I used at 2 a.m. today. Yes. All right. Great, sir. As always, man, feel free to throw out any questions, or if you have any additional things you need clarity on, you're in the right place, brother. So good to see you in the room. Okay, so where do we move on from here for the euro dollar moving into the U.S. session? Again, watch for a break of those lows. I'm looking for short triggers. If we bring up, again, that 5-minute chart, is there anything on tap here? You can see on the pullback, we're holding 40. So on this rally, we're going to want to see 60 hold, and we'll look for a support trigger, heading into the U.S. Open. Also, don't be too shy to jump into a 1-minute chart real quick and see if what you're seeing in momentum is being confirmed. A lot of times that'll be a nice, accurate pinpoint when you're actually jumping into the position. So, feel free to toggle back and forth. But broadly speaking, we'll let the U.S. opening range pan out here. We are holding just below resistance. Again, downside break, you're threatening a run right back into 112. And just for the, just as a disclaimer, a move back here, actually we'd be looking for a long position off that. The broader focus for the euro dollar has not changed. Okay, it's in an uptrend at resistance. Very plain and simple. A breach of the highs, 113.90. You're looking for 114.73. That's not necessarily going to be a scalp per se, but there's a lot of room. Okay, there's a lot of room if we clear this 2618 extension at 113.76. So a little bit of a tighter squeeze here for the euro, but I'm expecting something. Obviously, tomorrow we head into the U.S. event risk for the week, advanced retail sales, with the Fed really sort of zoomed in, focused on the health of the consumer. That'll be a nice tell. Remember, we got a really disappointing read last month. So this month we are expecting a nice little rebound of more than 1%. And again, could fuel some dollar strength, which could push this lower. But in general, we'll be looking to buy into that 112, 111.88. Oh, in fact, now that I just remembered, swing trades are looking for a setup in there as well. Jamie's looking for a move off of that 112 level with a stop against 1140, if I recall correctly. Was I talking to him yesterday? And that broadly falls in line with exactly what we're looking to do, looking for that entry there just below 112. Okay, any questions on the euro before we move on? As always, guys, if you have any questions or trade setups, do feel free to throw them on the message board. Kyle will jump into the sterling in a little bit. Just let me get through these and we'll definitely take a look at that. That's been an interesting trade as of late. Eileen says, thanks for Bill. Needed to hear that too on the moves and sessions. Well, always happy to comply, guys. Feel free to throw out any questions. Euro Oz. Got stopped out on a trade on this one last night on the RBA comments. Again, I knew Glenn Stevens was speaking. The only thing that he said, guys, and again, I want to take this in stride. The only thing that he said yesterday that really moved markets is that the RBA is, what's the word? They're comfortable. They have scope. They're leaving room, okay? They're open to further easing. And that's all it took for a massive drop down in the Aussie. But guess what? The market faded the move right off the bat, okay? Why? That doesn't really do anything. It's all fluff, right? Even if you look at the Credit Suisse overnight swaps overnight, they have not changed. Expectations for the next RBA print is about 25% for a 25 basis point cut. So that hasn't really been altered. There's nothing that he really said that changed the scope. Long story short, guys, this is event risk. These kinds of event risk is just a catalyst for volatility. Rarely, really rarely is it actually going to shift or change or reverse trend. So I actually used that opportunity to get back on the long side of the Aussie. We closed out a nice 40 pips or so. I can't remember exactly how many. Oh, Bernard, we're definitely taking a look at gold too. Don't you worry about that. Okay, so here's the Euro Oz. Let's get through these real quick so I can get into your questions. And again, we made it through 47 briefly. We punched through, never closed above, and here's the pullback. As we said in the scalp yesterday, you know, there is a high probability or is a risk for a pullback here near term. Still looking for that break below the median line, which we got right now. We'll see if that closes below. If it does, you see maybe a little bit deeper of a pull into 45 here. But broadly speaking, it's the same setup, very similar to what we're looking at on the euro dollar. All right. Again, we know the long bias at risk here with a break below that 146.25, that basic trend line support on the near term in the chart here, shifting the bias to the downside. Here's what the scalp looked like last night. So I had a short on from right here. Okay, there was a neat little trigger on the 5-minute. Actually, I can bring it up and show you. I actually saved my charts from the triggers last night, which I don't usually do. So let's take a look at Euro Oz. Here it goes. Okay, where is it? Okay. So on the drop here, we were in a short on the basis of this trigger here in momentum. Okay, momentum was failing every time to press above 60. This is not the RSI indicator we use. Let me bring that up. Oops. Okay, we were at trendline resistance, basic trendline resistance. Price was right at, or this is where this peak is. Price was right at this slope line off the highs. By the way, this slope line has been repeated 3 times now with really nice accuracy. Resistance, 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 almost support. Extended off the highs, we tapped right into it, then came off. So that was where the stop was, against that high. Okay. Bill saying, are there different RSI indicators? Bill, you can get this RSI indicator. It's called RSI2. You can find this on fxcodebase.com. fxcodebase.com. And it's great addition to MarketScope. I'll send this to everyone here. You can click on that link. And all it does, Bill, the only difference, everything else is the same, is that auto scales for you, and it drops those 60-40 lines that we like to use, whereas the regular RSI doesn't have 60-40, it'll only have 70-30. So feel free to grab that indicator. Again, it's called RSI2. It was actually developed by one of the guys who were attending the scalp webinars on Daily FX for a couple of years. You know, he uploaded that to FX Codebase and told me about it. So nice little tidbit there. In any event, we got the RBA release, and obviously we got stopped out on that move. There was an opportunity to get right back in on this. As it broke back below 70, you had a much better stop to trade against, and that was the key resistance level at 147.60 here. But shifted my attention elsewhere. We were long on the Aussie, and I didn't really want to, you know, double up on a long Aussie position. We more than made up that profit with the Aussie moves, and also an interesting move on the dollar yen, which is not typically my favorite setup, but I did put it on the radar charts yesterday, guys. We finally made a break of the monthly opening range. We'll take a look at that in a moment. So again, typically I'm of the mindset, guys, you know, it takes typically 2 scalps on a loss for me to abandon the setup. Again, this was going to be a great opportunity to get back on the short side up here. Heading into the wee morning hours, you know, Boutros needs to get some sleep. So that is the Euro Aussie. Okay, now that we've made it back below, again, this was the near-term bullish invalidation level. You know, we're just settling and testing the weekly lows, and a break below this, you're looking for 144.77, 144.45 here. Broadly speaking, again, looking for support on the Euro Oz to reestablish some sort of near-term long position. But as it stands right now, momentum turning over ahead of 70. If we close down here today, it's going to be an outside reversal, a key outside reversal. Okay, this is the highest high that we've made since February, and an outside candle covering essentially almost the entire weekly range if we go a little bit lower from here, but an outside candle at the high, at resistance nonetheless. okay? And that was a similar setup that we looked at with Euro Kiwi. We talked about this one on Daily FX yesterday. Uh, we made an outside candle at resistance. It wasn't a reversal candle, meaning it was not lower on the session, but these are oftentimes real strong signals of exhaustions, um, blow-offs in price, um, and you want to pay attention to it. I don't pay attention to outside candles when they come mid-trend. So, something along the lines of the decline here, I don't think we had anything compelling to point as an example. Something like this, you mean outside reversal candle, but you're not at resistance, you're not at support, right? And you're not at a major lower high. So you'll hear people all the time on Twitter, outside reversal, everyone will start looking the other way. That's not how you want to use them, guys. We want to take things in context. It's not just that the technical factor occurs, it's where it occurs in price that makes it operable, okay? And this was another example of an outside candle at the high. So long story short, Euro Aus at this point, we'll be looking to see what the close does today, but risk for a little bit deeper of a pullback. I'm not really interested in short exposure from here at this point on the back of this decline. Rather, I'd be looking for a new low here to get back on the long side, see if we can press this back higher. All right, so a little bit of a pause here for Euro Aus. We have Australian employment data tonight, so that should be also a nice little event risk boost in volatility. A quick look at what the expectations are for that print. Market expectations are looking for a gain of 15,000, unemployment to hold at 6.2%. Now, last month, we saw a contraction of 2.9 thousand. Not that big a deal, right? But what we'll be looking for is the change in full-time and part-time employment. And I noted this, I think, earlier in the week. We saw full-time employment in Australia contract by 21,000 the previous month, while part-time employment expanded by 19. Not that good of a development per se for the labor market. So we'll be looking to see what that dynamic is, specifically with the breakdown in full-time and part-time employment. That being said, the Aussie dollar is what's in focus next. And here's what the Aussie looked like on the back of RBA's comments. It's interesting because I actually set up this chart right before he made that announcement on those comments, and I was about to publish literally just seconds ahead. And then, that comment with regards to the willingness to ease further really slammed the Aussie. Long story short, doesn't change the technicals, doesn't change the setup, doesn't change anything. It just sparks and offers a catalyst in volatility. Here's what the Aussie dollar daily looks like. All right. So again, just a broader structure here. We've been in for quite some time. Momentum on the pullback. First time we saw a 60 breach since last year. And then on the pullback here, 40 hold and a trigger break. Okay. And in fact, if I'm not mistaken, I think that trigger gave out yesterday. Okay, we were testing it yesterday as resistance last night on the back of the comments from Stevens. We'll want to see this close here to validate at least a near-term trigger in momentum after holding 40. You can see that the high that we maxed out at was the exact 100-day moving average. That's 77.82. Again, near-term resistance, you're looking at 78.18 beyond here. And that's going to be the basic opening range high for the month. Here's what the scalp looks like. All right, so that turned out to be the exact low on the back of those comments. Again, fading these kinds of moves, especially if your bias is already weighted to the upside. And guys, this was the near-term bullish invalidation level. So right off the bat, as you're heading into 76.40, you're looking for long triggers. Momentum did dip briefly below 40, but that didn't last very long. And obviously, when you see an event risk, guys, any oscillator, when major event risk happens and you see a surge in volatility, they will not serve you well, okay? You're going to want to focus more so on price action. Why? Because that sudden surge can really, mess with any oscillator that you're looking at. Because again, this is not telling you what price is going to do. It's telling you what price did. So, if I was really super stringent with my rules, momentum broke 40 and we actually closed a candle below there, I should be looking to short on a rally, not the way to play it. So we want to know when we take these in stride based on event risk or when we actually want to operate off that. Here's another one. Here's Friday, right? Things slammed right into that key support at 57.90. You're thinking to yourself, oh, it's sub 40. We should be looking to sell rallies. Not the right mentality, right? An event risk, an external factor that surged caused this move in momentum. So we want to make sure we understand the oscillators very well. So at this point, here's what the Aussie looked like last night from the scalp standpoint on the executed trades. Well, we got out pretty early. We got out on this rally right here. Where is Aussie? There we go. I can tell I was looking at a 1 minute chart last night, so I was really all up in this. Here's what the 5 minute looked like from that rally. So again, that dip into key support on a move like this, it's a pure risk to reward play. Okay, it's a pure risk to reward play. There's not necessarily going to be a trigger in price. Even if we bring it into a 1 minute, okay, this was the actual trigger that I looked at on the 1 minute. I tack on things like these when we're doing event risk or when there's major key moves in the market that are very sudden. Entry right here with a stop just below this region of the trend line, and basically this swing low was a real awesome risk to reward. I mean, you're basically risking like 10 pips, guys. So the operative quarter daily ATR is 25 pips. So you're looking to book about every 25 pips. And on the first rally here into the opening range highs, or the highs that we saw for Asia, was where we took the first 25 pip grab, and then the extension again into the 77 handle is where the last limit hit. And again, I wasn't actually around for that. So from the swing side of things, you're still holding those longs. The broader upside focus remains in play. Near-term support at the previous resistance, 77.30, and looks pretty good, guys. As far as the setup is concerned, you could see a little bit more of a pullback here, but we'd be using that to get on the long side. Note that you're putting in slight divergence in momentum, so I wouldn't be surprised to see this thing break down if Mark earlier in the session, if the dollar gets a little pop here, we'll use that pullback to get back on the long side for scalps in the Aussie. Another one that's going to be in view as we head into the unemployment data later tonight. Okay. Mark says, oh, right, any plans to get some sort of chat room on SB? Actually, there is, Mark. I've been looking at a couple of different options. We've been talking around with the developers. So if that's something that I want your feedback on it, guys. If you'd like a chat room where you guys can engage together throughout the course of the day outside of these sessions, I'd be more than happy to bring that idea up and get that implemented. Shouldn't be too hard. So feel free. Your feedback has been phenomenal, guys, and I really appreciate those of you who are taking the time to write us some emails as we continue to build out the service. All right. Daniel says, Boutros likes to talk in third person. Mark says, watching the 5 minute on the euro for shorts right now. Let me bring that chart back real quick. Right, again, and if you do see a short trigger give out on the U.S. Open, guys, 112, that's been the game plan. So I'm with you on that, Mark. It's exactly what the game plan would be. End of the day, if this thing blows through 113.76, sayonara. I mean, you got a 100 pip rally to the top side that I'd be looking for. And again, not on the breakout, but on any type of corrective pullback here, we would try to get back on the long if we break that high. Other than that, you're still looking for a possible pullback into 12. All right, so those are the three featured scalps. The euro crosses have been really in focus. The Aussie, obviously, ahead of today's employment data, I wanted to highlight that. A quick look at gold here for Bernard. Here's what the gold chart looked like from last night. And this is the one, it was in gold. I was talking about this earlier. Very precarious because the close actually did hold that median line resistance. On an intraday, it didn't look as clear. We plowed through, failed ahead of 1184 and closed below it. Here's what gold looks like today. Okay. It pulled right through. Pooja says the chat room is a great idea. Awesome. Okay, I want to hear more of those guys. If that's something we have broad consensus on, for sure. You know, I brought that idea up when we launched Daily Effects on Demand, and it turned out to be, it's pretty active now. It's something that, you know, you guys have really enjoyed. So if it's something you'd like implemented here, no problems, Pooja. Looking at this, the gold setup. So obviously the trigger did pan out. A 40 hold in momentum curbs the appetite for the short side near term. And then the break of the upper median line parallel. This was the near term resistance range we were looking for, 1185. Next up, just shy of 1200. You have a 50% retracement of the entire range. You have that upper median line parallel, which caught the lows, same slope, and caught the opening range high for the month. And a basic trendline support off the low, tagged again in May, tagged again in late May, and here it is as resistance. And those all coincide right in this region between 1194 and 1197. Bernard, questions on gold, my man. It says chat room is a great idea for the future. You got it. Awesome. Any questions on gold? Again, a lot of people will be pointing out that, you know, the dollar is off today and this is why gold is rallying. I'd be cautioning you of using that as your only reasoning in and of itself on its own merits, guys. It's a breakout, okay? So what was the comments yesterday? We said, oh, the fact that it didn't close, or that it closed just below that and then shifted today's candle just above it. You know, there was some more warranted here. It makes things a little bit tricky, but we're generally looking higher while above 1171. And 1171, guys, is the low day close for the month that we made. So it's a good region of which to use as support. At this point, you'd look for support at today's lows. Again, key resistance just ahead of 1200. Will you be playing the event risk on New Zealand, the RBNZ? I would be, Aurelian. Unfortunately, I will not be around or available today during that time. Guys, actually, it's a good point that you brought that up, Aurelian. Quick disclaimer, we won't have a scalp webinar tomorrow morning. I apologize for that. You know, there was a death recently in the family here, and I do have to attend a funeral tomorrow morning, so I won't be available for the scalp webinar. The wake is tonight, Aurelian, so I'm not going to be around for RBNZ. I got to jet from here pretty quickly after the session closed today, but it's going to be a play of which you're going to want to wait out the noise, guys. Okay, the interest rate decision in and of itself is not going to be the story. It's going to be Wheeler's comments as it pertains to monetary policy, as it pertains to the inflation picture, which has been a little lagging, as it pertains to the housing market that they've been watching. And those are the comments that are going to shift the Kiwi. Jawboning is what he's known for, saber rattling, whatever you want to call it. So that's really what we're going to be watching. Mark, Eileen, Aurelian, I thank you for the kind words. So that's the gold picture as it stands right now. Any questions on gold? I do want to take a moment and segue into crude. That's making some moves here today as well. Here's what the crude market looks like. And for everyone, again, that was calling the drop down, here's our target from last month, essentially almost being reached, 62.56. That is the opening range high for May. Again, a trade that was kind of tricky. You made an opening range for May that never gave out. In the last couple of days, it may look like it was breaking down. If we mirror that trend line, exact tag, okay? This constitutes a break initially, it looks like, especially if we break through 60 of the initial opening range for June. And again, you're looking for soft targets just at that high. You're looking for that median line parallel off the low. And the 200-day moving average, and that all comes in just ahead of 64. In fact, let me just get the exact level on the 200-day here. 63. Okay, 63 into 63.75, let's call it, would be the median line parallel. And again, watch the close today. There's an operative trigger in momentum. We'll look to see if that offers any break. Really wouldn't stress this trigger break, guys. I'd really be more stressing the break above 60. Remember, that in and of itself can oftentimes be a great trigger. And it happened last month as we broke here. Broke through 60, was a break of the monthly opening range in April, and that's what shifted the buys to the upside for the month. And obviously on that month, we closed right at the highs. So we'll be looking for that, especially on the pullback here, finding support at 50. You know, it's just not a bearish trade yet. So look for that extension near 62.56, near that 200-day moving average. Right, Eileen, right. Let me just correct you in one thing here. Eileen's saying a break of 60 and then wait for the pullback break of 60, not the trigger, right? But we're on the daily chart, right? So you don't want to wait for a pullback on a daily chart because you're gonna have to wait for the next candle. That's the mentality we take, Eileen, when we're on the intraday charts, right? Looking at 5-minute, looking at 10-minute chart, you wait for the pullback after a break of that opening range. On a weekly basis, sure, we break through. Again, looking at the 30-minute chart, when it breaks through the weekly opening range high, wait for that pullback, find a nice entry, and get in. On the daily charts, we're just using these triggers and these opening range as just bias. That's it. There's nothing here that you're going to be looking for to actually put a position on. Does that make sense? Eileen says, yes, on the tighter charts, many thanks. Right on. Good question. Good question. So an interesting setup here on crude as well. These lines are no longer necessary, and we'll be focused on this near-term region we were looking for last month, or early this month, now in view. All right. Let me jump through your questions. I see some pairs here you guys want to take a look at. Sam wants to take a look at the dollar. Oh, dollar yen. Yeah, I forgot to go over that. So here's what's going on with dollar yen. This was on last night's radar chart. It was the first chart on there. Typically a pair, and I said this yesterday in the webinar, typically a pair that's not really strong with the opening range strategy. In fact, one of the worst. But in May was textbook. You got that break on the 18th, I believe it was, or late in the month, and we closed at the highs. This month, the opening range is taking shape just above support. And the operative play, and if you look at the chart from the previous day, right here, the operative play was, look, you have a really clean opening range. This 2570 is a measured objective of a breakout. You might find some stronger resistance here. Look for this break to give us a near-term validation on a bias. Well, it broke, and it broke with some fervor yesterday. It was pretty sudden. What am I looking for? Daily. Okay, there's not much to say here on the daily. I think it's pretty clear. But this was the opening range for the month. We're holding above the median line. You had that 24.13, 24.30 level to contend with. You had the weekly opening range low, which stretched into there. And again, the breaks up 60, looking lower, near-term support, just shy of the lows here. 122.36 was the target. The low is 122.44. So about 8 pips off. Still could get a drop a little bit lower into the US trade session. Here's what it looks like on the scalp. So again, another opportunity to take a really nice short on this trade. Last night, I actually did jump in on the dollar yen. I only took a really small portion, guys. I was only looking for a move into the opening range low for Asia. So I really wasn't expecting this big of a precipitous drop right at right at the turn of the hour there, right at the close of the, or right into the 1 o'clock hour. Long story short, here's what the scalp looked like. So only 30 pips got grabbed. The quarter-day ATR has expanded. Last night it was at 32 pips, so that's kind of where I just had the limit on it. Half leverage on this one because, again, we hadn't gotten the break of the opening range low. This is the opening range low for the week. for the month. Okay, and this was the focus that we were looking on the daily chart right here. So it's a real strong uptrend. You don't have any validation that you're going to get that break yet. So when you're looking to fade the market like this, trading half leverage, was looking for a 60 hold in momentum, and the stop was right above that swing high. So you're talking, again, really minimal, guys, 10, 15 pip stops. And anytime you can turn a scalp strategy into 2-to-1 risk reward, it's going to be in your best favor. So that was the premise of which the initial position was taken. You also had some divergence on the 5-minute chart. So if you look, momentum held 40 or held 70, held 70 again. Price action pressing into a new high. These real close highs in near-term price, when you're looking at a 5-minute chart, those are the divergences I pay attention to. Is that alone enough to trigger the trade? Not necessarily. There was a trigger that gave out. We jumped in ahead of that trigger, or right on that trigger break, just on the premise of the median line off the high, the 124.60 resistance level, and again, the stop was very, very clear with that swing high that you made to open up Asia trade the previous day. So any questions on dollar yen? At this point, you've completed a 618 retracement of the ascent. This is just off the lows that we made on June 22nd, or May 22nd, excuse me. And some of you are probably asking, Mike, well, what's the significance of that low? Okay, why would you take a retracement of that low and not retracement from the whole move? I'm sure, Eileen, you've asked that question before here as well, so I kind of wanted to just note this real quick. When you're looking to use Fibonacci, first of all, we don't ever really want to stress any specific Fibonacci formation, right? Again, they're used as guidance. Price action is our biggest tell. But from an Elliott wave standpoint, and I don't want to open a can of worms, guys, here. It's not a big part of our analysis, but certainly it's something that stands out very clearly. All you're looking for is, 5 waves and 3 wave patterns. So if we look at this advance here, I think it might be even a little clearer on the daily chart. If you look at this advance here, to me, again, I'm not a huge Elliottician, but learning the rules and having that experience or background information can be very helpful. Looks to me like a 1, 2, 3, 4, 5. So right off the bat, you do know that the motive wave, the up wave, has been in 5 waves. So we're looking for that pullback. So on a trade like this, right, you've already seen 5 waves up. You've come into a major key resistance. That major key resistance was the measured move. In actuality, you also had that 125.62 level. And on this pullback, sure, momentum has broken below 40 for the first time in the week. 60 hold. Looking for short exposure. So I hope that helps, Eileen. Does that offer some clarity on that? Oh, so to go back to the Fibonacci thing, now that I know, or now that I've been able to identify a basic wave pattern, I'm going to want to take a retracement of one of those bases to measure that leg, okay? And certainly from the bottom of wave 2, wave 3 here on the extension to 5 has been a very nice guidance for us. 618 now currently holding support at 122.65. All right, so if you're able to identify these waves, it's the wave lows, the wave peaks is where you're going to want to take those retracements to check out. Because if we take a retracement from the low here, guys, the 236 on a scalp basis, let me show it to you, actually. You don't need to visualize anything, just as an example. Right? Look where the 236 comes in. So if I'm trying to scalp this from 125, I'm not going to look for a target at 124.20. That's 80 pips. That's more than double than what I'm looking for. And again, it's because our stops are going to be super tight in comparison with the moves that you're looking to make. It's always better to get a little bit better of a near-term or closer view on price action. Yes, thanks for more fib explanations, says Eileen. You're more than welcome. Also, one other thing I wanted to point out real quick on this, guys, is that the slope line off the low that you see there in red. I'll let my chart load here for a couple of seconds. So this slope line right here that you see in red, if you stretch that to the highs that you made in early January of 2015, you can see that it caught the highs for April here. pivot break, and here we are just below the 618 retracement. So near term, that's your risk on the dollar yen. For a break lower, it would be a move below this region. And at that point, you'd be looking for a soft target at 122. And at that point, Eileen, we'll be more comfortable stretching that retracement and looking for the downside targets. Near term, watch that support. Okay, it's the same support that we're looking at here on the daily chart. Questions on dollar yen? Okay. Okay. Good morning, Kyle. Good morning, Kyle. Great to see you. He says sterling dollar, please coming right up. So here's what the pound looks like. Swings had a little bit of a hit on this one yesterday. That rally into 153.90. Jamie was looking to take a short position from there. I thought it was actually a really good position as well. You know, this thing has continued just to blow through. The only thing I want to say on the pound is this. You really want to stress the closes on this more so than most other pairs. It's really known to be, and I've told you guys this before as well, the professional traders market, you know, it's notorious for throwovers, breakthroughs, reversals through resistance or support. So I'm not really a big fan of where it is here. This is the formation I was looking at yesterday. I was kind of just messing around with it. Looks like it's holding pretty clean with this break here above 54.45, putting the upside bias back into play. Okay. And the momentum signature, if we look at this from the start of the week, hasn't really turned over yet, right? You got 60, 70 hold here, pullback holds 40. Again, we're above 60. So I'm not really trying to fade this at this point. I think you have a little bit more room to the upside before this thing inevitably gives us a little bit more of a steeper move down. 155.67 is an area of interest initially, is a 618 basic retracement off the highs from May. You also have the median line cross in there as well over the next couple of hours here. So a region of which maybe would be a nice entry to try to fade the move. Near term, you know, the momentum signature stays constructive. You do have a couple of triggers here you want to keep in mind. Actually, just this one is what I'd be watching. Wouldn't necessarily prompt short exposure, but certainly if you're holding longs, a break of that trigger probably wants you to clean up that a little bit, maybe take a little bit off, bring your stops in. Kyle, do you have a specific question on the pound? Is there something that you're looking to take? I'd rather be playing the pound crosses, to be honest with you. But if you're looking at pound dollar, there's a whole lot of chop. Even if you look at this from near-term price action, there's a whole lot of chop. So, you know, I know from a standpoint of how I'm trading, you know, a pair like this, which just gave us something like this yesterday, which was just an abomination into the open of U.S. trade. Again, a scenario where the U.S. opening range didn't break till 11 o'clock. So, you know, here's your 8:30 open. You press a high, you press a low, you come back into the high at 10:30, 11 o'clock break late in the session. So a little more patience is warranted here on something like the pound. Again, near term, I do think you probably see this thing stretch into 55.60 or so. That's 618, and we'll look for possible triggers up there. So Kyle, let me know if you have any more questions here on the sterling. Here's what the daily chart looks like again. Pretty constructive here if we break through this 54.88 level on a close basis. Kyle says, that's what I needed. Thanks, Michael. Hey, you're more than appreciate that, Kyle. More than welcome, sir. Eileen says, Eurodollar's not giving any entries, just keeps rallying. And that's the beauty of our strategy, Eileen. It's fine. Let it rally. We are on the constructive side of the trade. We'd be looking to buy pullbacks. If you don't get the pullback, so be it. The market will always be there, guys, and the market will always provide more opportunities. I'm never going to advocate chasing a trade, okay? Even if you're bullish to all, you know, to all end, and you're kind of kicking yourself because you're missing the trade, so be it. If the scalp is not there, the risk to reward is not there, the entry is not there, we'll wait for the next one. Okay, so looking for pound resistance 55.60, looking for euro resistance. Again, we're pushing through that 13.23, 13.24 area, so watch that 13.75. Watch momentum here at 60 if it holds. Okay, that was sterling dollar. Let's see, any other questions on any other pairs you guys want to take a look at or commodities? Feel free. I think I got everyone's questions here. Eileen says, "Thanks, Michael. Still healing my chasing tendencies, but glad glad to rein it in always." You're more than welcome, Eileen. Emil, DAX 30, please. You got it. I actually just did some fresh analysis on DAX. One of you guys, I think it was Ben, who emailed me yesterday looking for some DAX. I don't track it very closely, guys, but I did just take a quick gander at it yesterday for Ben. And here's my take on things. Yesterday you might have heard on CNBC and Reuters and Bloomberg that, it was heading into correction territory because we actually had a drop of 10% briefly before we showed a little bit of a recovery here today. I'm not listening to any of them. I don't care. At the end of the day, it was at support, and that's why we're getting the rebound. The basic 38.2 retracement from the advance off the October low, which was obviously a significant low in price. I also want to take a look at a basic extension off the high. I thought I had this on here. Showing some key levels I'll be watching here for the DAX. I guess I didn't save that chart, guys. Sorry about that. Here are the levels that I mapped out, or I was looking at yesterday at least. So a couple of different formations in play. Obviously, you have this median line formation, which is the broader operative one off the highs. But there's also another one here, just off of the high peaks of the decline. Not really stressing this one as much as I am the broader focus here. So look for 11,163, the lows from March, and that median line to all coincide right around this region into 11,200, 11,160. Near-term resistance for the DAX. This was the deepest momentum probe since early in October. You saw what that decline actually took us into the yearly low, so the risk for a drop really materializes with a break or a deeper penetration back below that median line. Again, on a closed basis, I don't know if you want to call that a break, guys, right? On a closed basis, it looks like it just caught it. So the stretch low bounced off the 38.2, the closed low bounced off the median line. Give it some up room. Give it some bounce here. It's nothing major. I don't necessarily think that you want to be levered to the hill on the long side of the equity market in general right now. But you could see a little bit more upside potential here for the DAX before it turns over. Also, an operative trigger right off the highs. Leave some room, right? Let me clean this up a little bit. Sorry, guys, my analysis from yesterday did not save, so just clean this up a little bit. So you can envision a scenario where you see a little bit of a pop here before it starts to turn over. Emil, does that help? I don't track it intraday, and we just have way too many setups to start tracking the indices intraday as well. But certainly near term, that's what I'd be looking at. Look for resistance since that just shy of 11,200. A downside break, a 100% extension of the decline is what I'd be targeting if we're in correction mode. And that would take you as low as 110.70. 110.690. And that coincides with the lower median line parallel heading into the end of the week. Early next week, maybe. All right. Questions on the DAX? Adri says, yes, Mike, a chat room would be cool. Awesome. Daniel Wilcox saying, that reminds me, is there a way to get the settings on trend lines to save more consistently on market scope? Dan, I'm not sure how you're saving them. If you hit Control-Shift-S, I do that about 1,000 times a day. That will be your quick key for the save. You want to save the layout, guys. I'm not sure if you're saving it through Market Scope, trying to save the profile, but you're going to want to save the layout. You can do that by clicking here and clicking Save Layout, or you can just hit Control-Shift-S and it'll bring it right up. I really haven't had any issues, Dan, with losing trend lines. The only thing you want to take note is this. If you're drawing trend lines, let me take a step back. The trend lines that you might see shift are trend lines that you draw off of one reference point. So if I draw a parallel, for example, and shift it, you might see that trend line shift. But if you use 2 reference points in price, typically it'll be all right. So Dan, hope that helps. Also, another thing that we're looking to do, guys, is implement, possibly looking to implement Trading View. I don't know if you guys have seen that on Daily FX or not, but it's an awesome charting package that's completely web-based and actually offers you the opportunity to, once we've posted it, to click on it and see price play through it in live feed. So it's a pretty neat feature. You know, again, let me know your opinion on that, but that's something that we'll be looking to implement soon as well. And all the charts would be saved on the cloud, Dan, so we wouldn't actually need to save anything or transfer charts between computers. Adria says, yes, I like TradingView and use it as well. Awesome. You'll see a lot more of that on Daily FX. There's a host of sites actually that's using it already. They're gaining a lot of popularity, and for me that's important because you know, for me it's all about the charting package and the tools that are available. So certainly if that's something that they continue to develop, we're already on our end trying to push that through as well. Eileen says, by the way, how do you get MarketScope to open the second instance, the nest inside your larger charts, the 5-minute, like now on top of your charts, etc.? So Eileen, believe it or not, I actually have 3 platforms open for the webinars here to show you guys these. You know, 2 of them are on the broader scope. I have this for equities, indices, broader, longer-term charts on this one. You won't see many 30-minute on there unless I don't have room on the major one. But these are actually 2 separate accounts. And then the, you know, the live account here, this is my personal trading account. So yeah, there's 3 instances open. The good news for everyone in the room is that there is a release from MarketScope coming very soon, within the next couple of weeks, that will allow you to open multiple instances of MarketScope. So that should be coming out soon from FXCM. Keep an eye out. All right, any other questions or trades you guys want to review, feel free to throw them out. Otherwise, oh my goodness, Kyle, the dollar CAD, how can I forget? Let's just take a look at that real quick before we close out the session. So yesterday's charts on the intraday radar were dollar yen for the break of the monthly opening range. The scalp on dollar yen was beautiful. Again, looking for 123.25. 618 comes in at 122.64. That's the next support. The other trade we wanted to highlight was dollar CAD. It's very similar to dollar yen in that the opening range for the month was super tight, and it was just above the median line parallel. So you're basically looking for a break of the median line parallel followed by a break of the monthly opening range to validate a near-term turnaround in dollar yen, or excuse me, in dollar CAD. Here's what the daily chart looks like now. There's the daily. Okay, so the first support confluence at 122.40, that just gave way. Kyle, your question was for dollar CAD, broke below 122.40, new lower target in sight. Yeah, so 121.64 is what I'm looking at next, Kyle, and that's the 618 of the same move. Also, it is a nice pivot low from May, and just ahead of that, right where we're testing right now, I would put this as a soft target, 122, and I think it is on the scalp. Yeah, it is. That's actually the opening range high from last month, Kyle. So I'd be watching this near term as support, a break below 122. You got another 40 pip run here for that 618. Here's what the intraday scalp looks like on dollar CAD. Before I move on, I just wanted to highlight the reversal confirmation was yesterday, a break of the monthly opening range, momentum, holding into 40 or holding into 60 resistance after a 40 break. Wasn't necessarily a trigger here on the daily chart I wanted to pay attention to, but those indicators, these factors, technical factors of failure at 60, clean opening range at the high day close for the year, which we already talked about early in the month, 125.59 was major resistance. And again, when the opening range takes place just below resistance, just above support, here was last month's opening range, gave out here on the 19th, stretched right into the high. Okay, so obviously it's a little earlier in the month to call this the same type of scenario, but you get the point. Opening range right at resistance, break, looking lower. Real clean, real clean. Here's what the intraday chart looks like. So if we take a basic slope line off the highs here, you can see that that 122 level coincides perfectly with the lower median line parallel, and may offer some near-term support in price. Broadly looking to sell rallies while below 123.16 rather. We can drop that invalidation level. Yesterday on the intraday page, I think the invalidation level was marked at 124. We're going to drop that down now to this region right here, where the median line coincides with that 38.2 and that pivot in price. So as long as price stays below this, we'll be looking to sell rallies in dollar CAD. Next downside target, again, Kyle, big, 121.64, but also I just wanted to highlight this measured move at 121.71. I think we did this in the webinar yesterday, right? For dollar CAD, the double top objective. Okay, high, made a low, stretched into new high. The break here puts that objective into view. And again, that comes in right ahead of 2160. So 2164, 2170 would be the next downside target with a break below the handle. All right. Kyle, hope that helps on dollar CAD, man. Looks pretty good. All right, so we are over on time, as usually is the case. I do want to leave the room open just for a couple more minutes if you guys have any questions. Since we're going to have the last webinar here today for the week on the intraday basis. Don't go anywhere. Remember, at 1 o'clock, Jamie Setley will have his midweek strategy webinar, and certainly he'll go over the current positioning on the Aussie and some other positions that he's looking at. So guys, definitely encourage you to stay tuned for that. Chintan says, can you look at sterling yen, please, real quick? Sure. So the major resistance we broke through, and we didn't get any type of run. I was looking at this region here. Basically, you're looking at the highs from December, and this was an exact 100% extension off the lows. It caught the resistance really strong. It was strong resistance. Let me put it in English. Last month into the close, right? And then into this month's open, it still held as resistance for the first 3 days. And that's what made me want to use this as an opening range. If the opening range had set up like dollar CAD right below this in a break, you'd get that near-term correction. I don't know what to do with this, to be honest with you. I still think you see some sort of near-term pullback to allow us to get back on the long sides. The stretch lower have been very brief. So let me just show you what the scalp looks like at this point. And the other thing is this. After we came into this resistance and it looked like we were breaking this median line parallel, the downside move just had no follow-through. And the momentum signature remains extremely constructive. It looks like it could turn lower from here, but in general, early in the month, that's why we haven't really highlighted this on the intraday page. Here's what it looks like on the scalp. Again, not the cleanest setup, right? Even from just the ranges that you've been putting in, this looked like a range of the initial opening range break. We came back, went right through it, almost came into the highs of the week, and then you got slammed, obviously, by some yen strength, just like we saw on the dollar yen yesterday. So there is a trendline support that could be in play here for this channel. But in general, it's a chop fest, right? It's not something I'm really interested in scalping. I do think the yen does take a little bit of a break here from the weakness and see some more strength. Dollar yen, like we said, has a little bit more downside possibly. So I could be looking a little bit lower, but I don't necessarily have any plays here from me on this one, Chintan. In fact, if you look at the momentum signature, it's still bearish on the near term. Okay, 60 hold. We tried to break 60 on this entire stretch, failed. But at the same time, now you're getting divergence into the lows. So, I'm not going to really mess with this one, but just watch that key region on a daily close basis for the pivot. Okay, if we get back below this, and specifically the median line, use that pullback to get on the long side. Scalps can be on the shorts with that break, but it's just there's a lack of clarity here. Kyle says, thanks, Michael. Love the sessions. Love the SB service. Hey, I appreciate that, Kyle. Thanks for your kind words, my man. Adria says, I mostly get to watch Jamie's videos. Tell him I like his weekly level featured. I print it off as well. Right on, Adrius. I will pass the message on to my man. Mark says, thanks. We will get a 5-minute break on the euro dollar. Could be. We'll see. Could be. Let the opening range pan out. Remember, last couple of days, it's been a little bit of a waiting game, but could be a nice play as we head into the U.S. session. All right, guys. Bill says, excellent. Finally getting it. Awesome, Bill. Awesome. And again, keep your questions coming, guys. This is the session that's made for you. We do this an hour every morning. I don't want anyone to hesitate. If you have a question or something we can help you out with, do feel free to post it. Guys, I'm going to wrap it up there. Again, I apologize for not make it tomorrow's webinar, but I hope you all have a great rest of the week trading. I'll keep you updated on SB Squawk as much as I can. And we will see you on Monday morning on Daily FX, public webinar, Tuesday, Wednesday, and Thursday of next week right here on SB. Best of luck trading, guys, and we will see you on Monday. Cheers.